Hi, everyone. Welcome to today's session, Why Real-Time Market Intelligence is No Longer Optional. I'm Kenny Etienne, Marketing Comms Lead here at Salary.com, and I'll be your moderator today, so feel free to communicate with me and with each other using the chat. To help us explore this topic, we're joined by Chris Caniza and John Sweet. Chris is Senior VP of Products at Salary.com. He'll help us unpack the market forces reshaping compensation today and why having a real-time view of the labor market has become increasingly important for comp teams navigating a more volatile environment. John is Director of Product Management at Salary.com. He'll bring us a live look at how Salary delivers real-time market intelligence and how comp teams can use those insights to make more informed and proactive decisions around pay, competitiveness, and internal equity before small issues become costly problems. Chris, John, great to have you both with us.
Hey, what's going on?
So, in terms of the agenda, today we'll talk about the volatility of today's labor market, the impact it's having on the compensation management function, and how real-time intelligence makes a difference. And we'll wrap up with a Q&A. So leave your questions in the Q&A box in the Zoom toolbar, which I think is at the bottom of your screens, and we'll try to get to them all at the end. Lastly, the session is being recorded and the slides will be shared with you all over email. So let's jump right in. Chris, let's start with you. So you've said that HR has experienced more change over the last 5 years than in the decade prior. Can you explain what you mean by that?
Yeah, yeah, Kenny, that's exactly right. If you look at the decade before 2020, and comp planning followed a much more consistent rhythm. Growth was relatively stable, depends on what market you were in, but the labor market behaved more predictably than what came after. And annual planning cycles usually held up for most of the year. Um, you'd set up your merit budget in the fall. You'd run it in the spring, and by the time you got there, the assumptions behind it were all still directionally correct. Um, I know, revolutionary. Then 2020 hit, and it's not like one thing changed. Almost everything changed at once, and it really hasn't stopped since, right? Like, look at this list of stuff you have here. You have, man, we got a ton of buzzwords, right? Great resignation. You had inflated offers, pay compression that followed. Then inflation hit, and every raise felt smaller in real terms, even the big ones. Layoffs came right behind that. Companies were handing out retention raises and doing layoffs in the same year. It was crazy. Then you had RTO return to office, added a whole new pay equity layer because companies had to revisit geographic pay practices that had gotten more flexible during that peak remote work time. Um, then pay transparency. That forced comp teams to have to pay to defend decisions publicly that were used to live quietly in a spreadsheet. And once those ranges are posted, they're visible to everybody, candidates, competitors, regulators, everyone, all in real time, right? So a stale internal number next to a fresh public one wasn't just a competitiveness problem anymore. It's a defensibility one, really. And on top of that, you had AI that's disrupting everything right now. And what we're seeing isn't primarily jobs disappearing, it's jobs absorbing new capabilities, hybrid jobs, people doing more work, right? We hear this like, how can you do more with less or the same, right? You have titles that stay the same, but the underlying skills, your expectations, the market values, they change faster than your job architecture was really built to handle. That leaves comp teams like your alls with a sharper question. When does an existing role become valuable enough to justify a higher pay, even though the title on paper hasn't changed at all? So by the time HR finishes updating the postings, in essence, the jobs they've changed already, right? So that's a problem. And then separately, skills, they're getting more portable. Things like AI, that's a buzzword again, cybersecurity skills, especially, those are portable from different industries. Someone with the right AI or security background isn't just competing for roles in tech anymore. That skill set travels into healthcare, into finance, into manufacturing, wherever it's needed, really. And so you layer that on top, and then you have business performance. It's varying wildly by industry. Some sectors are still hiring, and others they're not, barely moving, right? That makes one company-wide comp strategy a lot harder to justify. And employees are behaving differently now too, right? You've got job hugging. Now I'm telling all the buzzwords, right? People staying, but because the grass isn't necessarily greener on the other side, we don't know what's going to happen. And then you have doom applying, right? People just clicking, 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 trying to apply to every job, whether they're qualified or not. So you put that all together and you get what people are calling a low hire, low fire equilibrium, which is really just a fancy way of saying nobody's going anywhere right now. So this isn't just the market is different problem. It's more than that, right? You have pockets of high demand, some markets moving aggressively, others not. You have the gaps in pay between someone in the door and what you pay some person who's sitting next to you. Compression problems, right? That gap tends to widen faster than most companies can notice. And by the time it shows up in a retention problem, it's already cost you someone you didn't want to lose. So when people ask me why compensation feels harder right now, that's the answer. It's all the above. It just depends on a lot on where you are sitting, which markets you're in. Are you in a hot market? Are you in a low fire, no low hire, low fire equilibrium market? There's just not a one size fit all situation, and that's what we're experiencing here with all these trends, and that's going to continue to flex right as time goes on.
To your point about comp getting harder, Chris, when you and John speak with compensation leaders today, what decisions have you noticed are becoming harder than they were just a few years ago?
It's like a total cop out again. It's I think almost all of them, right? Like they're all getting harder at pricing, setting the annual budget, making hires, offers, deciding who gets promoted, figuring out like what's the right market adjustment, if it's warranted at all. That's not all new stuff. It's just what's changes. It's faster. The ground's moving so quickly underneath you. It's just hard to keep up, right? And again, I always caveat it differs by markets, right? But that's what we're seeing. Different markets are experiencing different things right now. A lot of it comes down to timing, right? Like you have, and I'm not trying to say anything wrong with surveys. I mean, heck, we have a survey business, but traditional surveys, the data just it lags fast moving labor markets, especially for high demand and emerging skills. It's typically reported a few months after it's collected. Once it's been aggregated across enough companies, right, to make it reliable, that's that's by design. It's not a flaw, right? That's the expected. But it does mean that by the time the data reaches you, certain markets, especially those high demand ones, the fast moving roles, they may have already moved, right? And this hits new higher pricing and existing employees differently. When you're pricing a new hire, you need to know what the market's paying right now. Candidates are comparing your offer against live data, right? It's all out there, live postings and other offers they get. So it's just tough to compare that to the data points you have, right? But with existing employees, you're not just asking what the market pays, you're asking whether someone priced that job correctly a year ago. Things are changing. And whether the gap between what a new hire walking in makes and what that more tenured employee makes has quietly turned into a retention problem. Comp compression, everyone's favorite word, right? That can be a real driver of regrettable turnover. And faster data can catch that gap while it's still small before it turns into something serious, right? And so that was just pricing jobs. On budgeting, you're relying on a few data sources. You can create a blind spot in your comp planning. And that's not just, survey data versus what we're calling real-time data. It's about a range of whole other data sources, right? Comp leaders are getting this right if they're triangulating and blending together your traditional surveys with some of these alternative data sets, other market signals. So you can catch something that potentially like one source, if you only you're using one source, may not see. That could be a regional shift, an industry specific spike, a skill that is commanding a premium. It's not only just AI jobs and tech jobs either. It could be evergreen positions, healthcare, retail, other frontline jobs. Sometimes they're just moving faster and just for different reasons. 5 years ago, comp teams spent a lot of their effort assembling market data from different sources, right? We use those 3 to 5 sources. Today, they have more data than ever before, right? And so now the challenge gets to shifting from access, because everyone has access to data, to being able to interpret those data sources, right? The question isn't whether you have the data, it's whether you can tell what's signal and what's just noise. So that's really important. Now, hiring and specifically in high demand talent markets, candidate expectations can shift faster than your hiring process. Now, that's not true across every job right now. The broader market has cooled some compared to a couple of years ago, but for AI talent, cybersecurity, like I mentioned before, specialty technical roles, candidates are still comparing offers in real time. And so if your process is really slow, that can cost you those candidates, right? I'll skip ahead to promotions. Um, Emerging roles often don't have established benchmarks or leveling standards. So titles that barely existed a few years ago, because it does take some time for them to appear in surveys, right? At least a year or two. Comp teams sometimes have to go find other means to figure out how to pay for those jobs, right? Sometimes you can slot them. Sometimes you can find a close benchmark. Other cases, they're just coming up in the market, right? So that's a lot harder. And finally, market adjustments. Skills are skills are evolving just so fast that pay structures they can't keep up. And we talked about this with the AI stuff a couple minutes ago, and it shows up plenty in non-AI jobs. And when that happens externally, it usually shows up internally too, as a widening equity gap between people doing similar work, often before your next pay equity audit would even find it. So the decisions haven't changed really. Those same problems are out there. What's changed is really I'll call it the shelf life of your data sources. Um, they're getting shorter, the shelf life in the parts of the labor market where there's high demand, moving skills and hiring patterns that are moving fast. That's the gap we built. Um, and we believe with this Max platform, we're able to close a lot of these gaps. We're not replacing the data sources you're using, but we're using other tools and technology to augment them, right? So you're looking at market movement, emerging skills premiums, hiring shifts, all while they're happening live, right? And not waiting before those changes happen. Not after it's really gotten expensive for you, to be honest.
Thanks for breaking that down, Chris. And you mentioned blending those real-time signals with your traditional data sources as opposed to relying on a single source, and risking having those blind spots in your comp planning. So, John, I'm wondering if you can talk more about what kind of information comp professionals can get from those real-time signals and real-time intelligence that they would not get from traditional surveys, and how those insights enable them to be more proactive and strategic. Let me see if I could get you off mute.
Can you hear me
Uh,
okay?
Yes.
Okay. Yeah, so a lot of the signals that can be gathered from real-time market data or market intelligence, obviously with surveys, there's the structured, tiered, reviewed pay data across roles and industries. Again, surveys are sort of the benchmark. It's still the gold standard that we follow and Comp follows. As Chris mentioned, we conduct our own salary surveys. But blending that with things that are happening in the market today, whether they be organizations that you consider peers in your space or in your industry, what types of roles that they're hiring for, how active they are in your pay markets, what skills and how they write job posting descriptions. Additionally, how long those roles actually stay up on job boards, I think, are important as well. So we call that posting duration, sometimes considered a proxy for time to fill. Some of those are indicators of how quickly those postings are going out, and then how they're being filled internally, or how quickly an organization takes down those postings, whether they filled the role or decided to not fill that role. So those indications or those signals in aggregate can sort of help be that leading indicator where salary surveys may fall short, depending on when you actually get your results from your salary survey, or when the results were actually collected, or when individuals participated in the surveys. So what we look at from the posting data perspective is what employers are offering today for open roles. So what's advertised. And, as we know, posting ranges can be very wide. We're seeing a trend closer to, getting posting ranges a little bit more realistic. And I think pay transparency laws, play a big part in that. We're seeing a much more as far as organizations providing posting ranges as well. We've seen about 65, 70% in some instances, and obviously in states where pay transparency is required, we're seeing lots of posting data in obviously those states. It's really the context for niche and emerging roles specifically, roles that maybe they're titled differently than what you see in a traditional benchmark survey, or maybe they just haven't, as Chris mentioned, made its way into a survey yet, maybe not a benchmark role. Well, as comp professionals, folks are still tasked with pricing those jobs out, as an example. And oftentimes what an organization will do is sort of Frankenstein those jobs, build out those hybrid roles off of existing benchmark data, and apply weightings or premiums or discounts to those roles that best fit. With posting data, you can get a good signal, and oftentimes where there's no compensation data available, it can be leveraged as a data point to consider. So what we're seeing a lot of organizations do in market composites, as an example, this concept of blending in survey data cuts with real-time market data from postings is, perhaps they'll use a posting data cut as a reference point, one that doesn't necessarily impact their market composite, but one that is there as that signal. And we've also seen other organizations, due to the lack of data, using a posting data point within their composites, whether it's weighted or as a single cut where no other cut exists. So being able to blend that together and also understand, if I can get posting data updated daily, I can sort of track how, since the survey results have come out, how's that job moved day to day, week to week, month to month, quarter to quarter. And then how are organizations that I actually compete against, named organizations, how are they moving with the market? Are they adhering to the same set of guidelines that I'm getting from, or indicators I'm getting from my salary surveys? If not, then maybe I have to move to secure that talent against a rival in the area for that talent. So these are just some ways that this blend occurs, and it's not just posting data. As an organization, we're looking at a whole host of data sets outside of just job posting data. Labor market statistics is very important to us as well. But I think also getting down to local markets as well. So Do you want to get down to the zip code? Do you want to just look at MSA, a broader MSA or national data? I might have data in surveys or other data assets I have internally that focus on the state of Massachusetts. Well, I really want to get down to Waltham, Massachusetts, or Boston, Massachusetts, or Burlington, Massachusetts, or Springfield, Massachusetts. Oftentimes data sets don't get that level of granularity. I think with posting data, you can definitely get a little bit deeper into some of the metros that maybe you have employees.
Right. Thank you, John. And you've both
Mhm.
addressed this at length, but just to further clarify for the audience, are we suggesting that real-time signals replace traditional salary surveys?
No, absolutely not. I would say they're a complement and oftentimes can be a leading indicator. You might see signals that from posting activity, show itself or manifest in surveys later on. Not always, of course, but we do see it as a leading indicator. Like I said, I don't think there's a lot of folks at this moment that are building market composites using posting data, but again, that signal is used as an aid to the existing benchmark data that you get from salary surveys.
Chris, before John continues talking about real-time intelligence, can you speak a little about how it became clear to your product team that comp professionals needed a different approach?
Sure, yeah. This is like 5, 6 years. This is a pre-COVID venture, but I'll be honest, it wasn't like a one light bulb moment. It started as an internal data collection project in the product team well before it was any kind of product. What kept us going were the conversations we were having with folks, comp leaders on teams. And I've been around comp people and comp software users for over 25 years at this point. So I wasn't hearing anything new. I was hearing the same frustrations, right? Like we've been talking about for a couple of decades, just from someone else's mouth. Someone trying to price a new job that hasn't existed in the last year or two, nothing to benchmark against, someone else staring at a compression problem between a new hire and an employee that has 5 years of experience, that type of stuff. Those are the same problems, right? Fundamentally. But the real unlock was really, to be honest, pay transparency, these state level requirements coming in. Once those laws started requiring organizations to post offer ranges publicly, that data existed in the market for the first time consistently in a way it really hadn't before. We looked at that and saw a really big opportunity, not just to collect it, we've been collecting it for a while, but to actually operationalize it. Because we have this, with products like market data, we have our proprietary job taxonomy, the way that we understand and think about jobs, and how jobs progress from one level to the next, right? We're deploying that same methodology, and we've spent many, many years building it. And every month you'll see updates and improvements to that taxonomy. We're just leveraging that again here. So it's pretty compelling stuff. We're collecting over 1 million unique job titles. I think we said 1.4 from the market sources mapped against our taxonomy of benchmark jobs. And that taxonomy is what turns a mess of scraped offer ranges into something that you can actually act on. They're matched to the right roles, the right levels, the right contacts, all that good stuff. And I'll be honest, this wasn't an overnight win. We spent many years collecting the data, like we just said, even before it became a product. Early on, this kind of real time data just wasn't useful. But now we have something. We started to see comp teams, the more progressive ones, trying to leverage this data set in-house. It's just somewhat inefficient. You had small teams with not a lot of bandwidth to screen, normalize, and operationalize the data set that's publicly available. That told us that there really was a business need and it just hadn't been built for broader market use yet. And again, you still have surveys, right? I think that took a second for comp people to we're not coming in here trying to replace surveys. That's not the intent. But if we can augment it with some really compelling data sources that show you market direction and momentum in between those survey cycles, I think we have something very interesting. You could see where things are heading and before your next benchmarking. And once people understood that, it wasn't competing with their pricing methodology. It was just sharpening their sense of where the market was moving. The value has become obvious in this point, and that recognition has only grown since. We're actually starting to see other offerings in this market, which tells us the need is real. But we recognize the need, and we're actually delivering on something that we think is an improved product because of the quality and the quantity of the data and the postings that we're capturing. Like I said, we saw comp teams trying to do this manually, and that's really hard to do. It's expensive, it's time consuming. You try to do this with generative AI. Trust me, we've tried doing it that way. You don't have all that rich job matching, the normalization and the governance. It's really hard to deploy that, let alone trying to deal with what's a hallucination or not, or you're matching it to the right data set. And you all know in comp, it's you get one data point wrong, and that's a big problem, right? So again, what makes Max different is it's a lot of this AM matching stuff that I'm alluding to. It's all grounded in that our job taxonomy that we've been managing for over 25 years. Not guessing at it. It's leveraging this proprietary data set. That's the sort of the framework, the groundings that goes into this tool. It's built on all of that success. And you can leverage that. And again, in tandem with your traditional survey sources. And I think that is, something you could leverage in our product as well, right? You have access to not just posting the Salary IQ data set, this real-time market intelligence set, but you could also leverage our bread and butter solutions, right? You can leverage our CompAnalyst market data, or you can even implement your own third-party sources and use the product to manage it all in one interface, which is really cool in my mind.
Excellent tee up. Jean, can you introduce the audience to Max? Chris has already began doing that, but just in terms of what it is and what you'll show us over the next few minutes, and you can steal the screen share whenever you're ready as well.
Sure. Yeah, I mean, Comp Data Max, it's how we tried to solve the problem that Chris, Kenny, and I have been talking through. It's really the comp decisions that need to happen faster, and being able to get that data to the teams that are working with it, and they can support. So the platform covers the full compensation lifecycle in one place. We're only going to go through a couple of examples here, but we see the Max model where we leverage AI, of course, and then also real-time data assets. We'll look at one today in job posting. That we really see that infused in all the various products and workflows at Salary, whether that's compensation planning, pay equity, market pricing, and benchmarking. We see it certainly in job architecture and job description management as an example. We're really covering all those different areas, in slightly different ways, because there's a lot you can glean from just posting data, and then also some of the other real-time data signals that we have access to. So really, the platform was built around the idea that comp decisions happen at specific moments, and those moments don't wait, as Chris had mentioned, wait for HR cycles to start and stop. So the intelligence that we've built underneath it starts with a very specific ask around a job and a geo. And I'll show you that when we get into the screen sharing, but also how you can build out peer groups in the application. So not only comparing yourself against the labor market like a geo, but folks in those geos, or organizations that you compete against for labor or talent by name. So I want to look at these 5 competitors: Google, Amazon, Microsoft, Anthropic. You can do that. You could look at that from a job perspective. You could look at it from just the labor market perspective. So I just want to look at one company across multiple geos, or I want to look at an entire geo and all companies, and get some really great intelligence there on what's happening in those markets. We've mapped a lot of different data elements across Max. And what you'll see today is just a few. And they're in some familiar workflows for folks that are familiar with Salary.com, who maybe used CompAnalyst market data in the past or have seen it. As well, we'll jump in a little bit to the posting platform to start and actually show you that as well. So I can do some screen sharing if that works. Kenny, Chris, anything you'd like to add while I get this fired up?
No, I mean, like I always highlight the power of the AI elements, but I feel like we've all been burned out by the AI buzzword. So we have AI. We could definitely spend some time talking about that when we think about matching. Many businesses are being mandated to use AI, so we can definitely that could require its own hour-long conversation, but it's built into the platform.
I can stop sharing if that makes it easier to switch over.
Yeah, let me see if I can figure out Zoom here.
Everyone, don't forget to leave any questions you have in the Q&A for Chris and John, and we'll get to them at the end.
Okay, so hopefully you can see this. I'm kind of moving it around here. Does this show up on everyone's screen? Can I get a thumbs up, Kenny?
I see it
Now
now.
I can see it. Yep.
Okay, perfect. So what I did was came into the CompAnalyst application. And I wanted to start inside a tool we call Salary IQ, and this is leveraging the posting data. So we scrape tens of thousands of organizations, and we do it in the U.S. and globally. As I mentioned, we do give you the ability to build out peer groups inside of the tool. You can view data insights that are driven off of your established peer groups. We can do things like look at data across a saved list of pay markets or scopes that you may have created, and also look at this across a saved group of jobs that you commonly might go out to look for those signals. What I'll show you here, I just wanted to pull up a job we get a lot, and it's a fairly new job, and I'm not sure it's in every survey that's come up. And what I wanted to do before this call, I wanted to create a saved jobs list, and I just wanted to keep it on some AI focused roles. So went ahead and just pulled in some typical benchmark jobs that we have in our application and run these. And I want to do it across actually a saved scope. So, what organizations we find are doing in this application, and much like they do, obviously in their market composites, is they develop pay zones or pay markets. I have a pay market established in here of San Francisco, San Jose, and I'm going to look at multiple industry segments. And I don't really care about company size, but I could definitely break this down by company size as well. I'm going to look at a bunch of different AI jobs across my Bay Area high pay zone, and I'm just going to run this report. And what we'll pull up is it's a multi-job report. So it's actually looking at this holistically across the 2021 jobs. How many postings are out there that are active as of today? So this is open, active, up on job boards or company career sites. And there's about a little over 2,000 companies that are hiring for various AI roles in the San Francisco Bay Area and San Jose. So in aggregate, it's telling me, what the median salary is, over the last 30 days, how much has that median salary increased is a good indicator of where things are going or also have been, as you can see in some of these graphs below. We can see the posting volume has increased as well, another signal that there are more organizations posting for jobs, as well as more hiring companies posting for these AI roles. And the average of where these roles, how long these roles stay up on job boards or career sites is about 19 and a half days. So some really good indications and signals and some of these AI roles. Now, you can see we have multiple jobs that we have added to our report here. We can see this data broken down by base salary. We can also look at this broken down by mid, and max. And we can break this down by various different geographic locations. So in this example, I just defaulted to all here, but what we can see is by city or state, who's hiring in these locations, what those postings are. If I actually roll over to the posting view here, what we're able to see is a lot of information as far as San Francisco is concerned. We have 315 companies hiring in San Francisco. And we can see some familiar names in here, like OpenAI, Anthropic, Capital One, Handshakes in there, DocuSign, Databricks. And what's interesting about this is you can actually drill into the posting titles, go to the posting source, and also consume, the percentiles or those mid-max values. So where we've seen a lot of organizations leverage this data is to create peer groups in here, run those reports, and then tie them back as a reference cut or just as an insight in their market composites. So I'll show you that in just a second here. And what I did inside of a composite, again, it's see if I can pull it up here. So I created a composite for an FTE here, and I created this in my San Francisco market. So this is a forward deployed engineer. I actually brought in some various cuts from salary surveys, either Salary.com, a Mercer cut, our iPass Global Tech cut. Actually have a reference cut from one of our other surveys, our comp data survey. So I'm in the progress of creating this composite for this brand new job. I've added some survey cuts in here. Now I just want to really just get a gauge. This data could be somewhat old. It could be dead on, but maybe I want to pull in market intelligence. So leveraging the posting data to actually look at that in comparison to what's out there in my composites and my cuts. So it does run through a prompt tree, which you can go through here. Pay is what's the pay range for job postings. So I could pull that through, and very quickly we can see, in San Francisco, this is over, I think, the last 30 days, 93 companies, 129 postings, and we get a range here that we can then compare to our established composite or composite in progress. So great, that's good information to have. Well, what are the top hiring companies in San Francisco for this AI forward deployed engineer? Well, here we go. This is over the last 60 days. We can see that we have quite a few companies that are recognizable: EY, Anthropic, OpenAI, PwC, Waymo. Some pretty big companies with a very large AI presence. We can see over the last 60 days how active they are posting for this particular role, what their median salary is, and how long that those jobs, essentially are staying out on their job boards or company career sites. So within each one of the insights that we provide in a market composite, we also do provide reasoning around that. So these are AI generated responses. These are curated prompts run through our comp team. So they're answering compensation related questions, not necessarily on the postings themselves, although they are surfacing posting content, but it is in relation to the composite that you're creating. Goes into key trends, whether roles are increasingly becoming more remote, if there are sign-on bonuses involved in these hires. And then if you do have an established set of peers, which I do, I believe, I threw a couple of peers in here in a group. How does this job? It's great. I looked at the market in San Francisco for an FDE, but I want to look at this for, against Anthropic, OpenAI, Glean as an example. And we can see, very wide ranges of median salary based on posting ranges. Some very, very high, as you can see with Anthropic. And then an analysis on those three competitors. It could be three competitors and be hundreds of competitors or peers that you can establish in the system. Goes through skills within the posting. So at Anthropic, at Glean, at OpenAI, what are some strategic recommendations? As an example, broaden skill requirements to include AI, ML systems. So what that's doing is it's looking at my job description, looking at the posting descriptions from my peers, and providing me with some recommendations on how I can adjust or tweak my description or my skills that I require for the role. Probably looks a little bit better if I widen this out to full page here, but as this continues, even more insights are provided. So this is a table that compares the job descriptions with those of your peers. So your description that's inputted into the application can compare against the peer set. Provides a summary. And then, what are some of the most in-demand skills for this role in this particular market? So all these things can be done just simply by creating a market composite, which I'm sure many of you have already in some of the systems you run, whether it's Salary.com or other systems, or even it's done in Excel. Some of the skills we see in here for the role. We can see demand percentage, salary premium that skill may command. And then again, more detail on a summary of basically the findings of these skills and what that premium commands in the market. You can also look at the skills that you have that you've appended to this job, whether it's in your job description or if it's in your market composite or both. It can do a comparison of your skills and your requirements for that role against that of either your peers or the market. So it'll highlight missing skills, market demand, top paying skills, with the median salary premium is above your job that you have in this role. So all these insights really are done in the context of the flow of work. And this type of content can append to a market composite and be updated as you go through your process, whether it be daily, monthly, however you see fit. But we see this as a great addition to the tried and true surveys that you typically have inside of your market composites. One other area that we're infusing both AI and real-time market intelligence, specifically with the posting data, is in one of our flagship products, CompAnalyst Market Data. So CompAnalyst Market Data is an application that aggregates data from over 400 commercially available, 100% employer-reported surveys. And we provide an assessment on the market based on that data. So it's our assessment of the market. There's over 15,000 searchable jobs in here, but as Chris mentioned, I think Kenny mentioned, we have access to over a million. I'm thinking of the 1.4, 1.5 million leveled jobs inside of the application. So if you have a job as unique as a drone pilot, or you have an AI forward deployed engineer, you can bring this data up and you're most likely always going to see a match, and you're most likely always going to see data. So for this particular role, an AI forward deployed engineer, I ran that quick. I ran in my San Francisco market. I looked at the national cut. We can actually look and bring in skills specifically for this role coming from posting. So again, that demand and the salary adjustment across those skills within an AI forward deployed engineer. We could also show the salary data as provided by benchmark against competitors. So this could be the broad labor market, or it could be named competitors. So, how I stack up to the combination of Anthropic, OpenAI, Glean as an example. And always within CompAnalyst market data, you do have a view into market intelligence, which is a smaller snapshot of the Salary IQ posting data, which allows you to then also traverse over to Salary IQ, the job posting tool. So all within the flow of work, all designed to provide you with that real-time intelligence as you're doing things like benchmarking and market pricing.
Thanks so much, John.
Yeah,
Is it a good time to transition into Q&A? You've got some questions.
I think so.
Okay, let's head back to these slides. So this has been a really great conversation and demonstration, and we've got a few questions stacked up. So I just want to make sure we get to them. And while we take your questions, please use the code on the left side of the screen to receive professional development credits toward your SHRM recertification for completing this webinar. And you can use the QR code to the right to learn more about CompAnalyst Max. And for every completed Max demo, Salary.com will actually make a donation to Women in STEM, which is a Chicago-based nonprofit that combats gender inequality in STEM through outreach, mentorship, and networking. So thank you all for being here and helping that effort